Hello, everyone. Welcome to another Monday market update. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona. I hope you had a wonderful Thanksgiving. Thank you for joining me on this Monday. We're going to talk about everything related to Phoenix real estate, what's going on in the market, what's going on in the economy as well. And let's just jump right into it. First, hit subscribe if you're new here. You don't want to miss these updates every Monday, and come follow me on Instagram at your Phoenix real estate agent. I would love to see you guys there. So I want to talk a little bit about some clickbait. Okay. So I saw this article on Yahoo Finance, and while I think they have some good points in here, I think there is a lot of clickbait. So let's start here. Buckle in for brutal free fall in home prices and U.S. housing. It's in a massive bubble, experts say. Here's how bad. So let's talk about what they're saying here. Definitely some validity here. The Fed's rapid interest rate is soaring mortgage costs. We're not surprised about that. Home sales have fallen for 8 months. Prices are dropping. All of this is true. But they get a little dramatic here. And I think they're forgetting that the last time we had a huge housing crash, prices fell by like 50%. And so it's interesting as you scroll through here, I expect housing prices to fall 10 to 15%. Okay, sure. Yeah, we're having a correction. We're changing direction. We are absolutely softening in our prices, but I wouldn't call 10 to 15% a crash or a bubble or a free fall. Let's see. I think we're going to have the second biggest housing price decline since post-World War II period over the next 12 months. So again, I would expect maybe 50% if that's the case, but they're talking 10 to 12%. There was a few other numbers in here. This says we have a massive housing bubble right now. Let's see, the Fed's tightening efforts to bring inflation down. So, I wanted to call this out because here's another 15 to 20% drop. Just be careful what you're reading out there, because first of all, this is on a national scale, right? So every market performs a little bit different. Not saying that Phoenix is immune to anything. However, it's not always following the same path as every other place in the United States. And also, I think this headline is a bit aggressive. A massive free fall, at least to me, does not mean 10 to 15% or even 20%. So what's interesting about this is there is a comment from the Cromford report that I want to share in conjunction with this article. And I just read this. This was from November 23rd is when they shared this note. And it says, we're talking about new listings on the market. Only 6,713 new listings were added in the past 4 weeks. This is down 27% from last year, down 25% from 2020. What's most amazing is that these low numbers of new listings come less than 5 months after the record high of 12,246 on June 28th. Those who think the housing market is a bursting bubble are obviously wrong. So we have two completely different points of view here on a national scale, some clickbait articles talking about a catastrophic bubble, and then the Cromford report, who's actually looking at this data daily specifically for Phoenix, saying there is no housing bubble. They talk about how in a bubble, we have a stampede of sellers that are trying to get out. You'd be forgiven for thinking the bubble was bursting in June, but there's no evidence to support that conclusion today. We've have tired and low volume market, but supply and demand are both very weak. If new supply stays as low as it is now, it would not take a large increase in demand to go back to a balanced market. So that is, as of November 23rd, what the Cromford report has been saying. And if you're new here, the Cromford report is a publication that I follow and I'm a subscriber to. They produce a lot of great information for realtors to use by analyzing the MLS data historically. They've been looking at that since the year 2000 and looking at trends all of that good stuff to help us understand where the market is going, if we're seeing any new trends, any shifts, any red flags, and they've been pretty on point. So that's why I always choose to follow their information. So anyway, I just wanted to share that because I thought that was a pretty interesting difference between those two articles. So let's jump back into what's going on in the Phoenix real estate market. On a quick note, as far as the economy goes, we are expecting another Fed rate hike soon, but it is likely going to be 50 basis points. So they are starting to slow their pace of rate hikes. And then in January, probably, or February, another 50 basis points. That is word on the street. So we may have said goodbye to those 75 basis point hikes, although mortgage rates have been holding steady, and I'll talk about that in a little bit. But I want to talk about the average sales price per square foot. So this is interesting because today we're just under about 200 and, or let's see, today we're just under 273, just under 274. And if we look back towards the end of September, we were around like 279, if I can find September here. And so we've lost about 1% per month, and that's been pretty standard since we started to see the decline after the peak back in that May timeframe, April, May. So although we have seen a decline since then, about 1% per month, we're still over last year's average sales price per square foot by $8 a square foot, still remaining high, clearly over 2021 rates and 2020, but definitely softening. However, when you look at this, I really don't see a massive drop or big cause for concern from, the top to here. It just seems like we're kind of gliding. We've certainly lost the price per square foot, but we're not in, this graph just doesn't scream, red alert to me. So although we have really low demand, the shortage of supply is really counterbalancing what we're seeing in the market as it relates to prices. So wanted to share where we're at with this monthly average sales price per square foot. Sometimes I share this as the median sales price, annual median or monthly median sales price. This is just how they've, the Cromford report has shown it lately. And so figured that would be helpful for us all to look at. So let's talk about the CMI as we're talking about supply and demand. This is the Cromford Market Index, and this is their measure of supply and demand in the market. 90 to 100 is a balanced market. Anything above 110 is a seller's market, and anything under 90 is a buyer's market. And here's where we're at today. We're at 88.1 as an overall Cromford Market Index. So as you're seeing this, that's below 90. So that is technically a buyer's market for all of the Phoenix area, just slightly. In our demand side, 100 is normal for both supply and demand. So we are about 28% below normal for demand and about 19% below normal for supply. So our demand is definitely less than our supply. So when you have an oversupply or more supply than demand, we don't necessarily have an oversupply, but more supply than demand, then you will be seeing a market that is favorable to buyers over sellers because buyers have more choices and more leverage. Now, if we had an oversupply, this number would be over 100, and we would definitely have a different situation and more of a concern of a market crash if, let's say, this number was at 110 and demand remained this low. Then we would have supply way outpacing our demand, and therefore prices would start to come down much faster. So as the Cromford report was saying, we're kind of in this situation where we have a counterbalance going on where although our demand is low, our supply is also remaining low. And as we go through the holidays, we're not getting much new supply at all. That's pretty typical. So this is kind of remaining stable. And we're not seeing a lot of change in home prices. Come January and into February, as things pick up, it will be interesting to see what happens with this, but also with mortgage rates, because those are definitely affecting where the market heads here in Phoenix. We did see that purchase applications for mortgages last week rose again by 3%, and the week before they rose by 4%. So we are seeing more buyer activity since the drop in rates. And I'm going to show a chart here shortly of the number of listings we have under contract, so we can talk more about that. But before we get there, let's talk about each city's CMI. So let me take this off here, and I'm going to move this over. There we go. So you can see every major city throughout the Phoenix area and their respective CMI. Fountain Hill's still leading the pack with very little change over the last month. They've been in the #1 spot for quite a while now. Scottsdale is up there as well. But if you notice, we now have 2 green arrows on this list. We have Cave Creek, which just joined Surprise for another for a move towards sellers. And so what the green arrow means is that the CMI has increased, which means it's more beneficial for sellers. The higher the CMI reading, the closer to a seller's market or further into a seller's market it is. So Surprise is at 70.3. It's still a buyer's market, or it was at 70.3. It's at 73.3. Still a buyer's market there. Cave Creek is still a balanced market because it's under 110. So it's not that these cities are, crazy sellers markets or anything, but they're gaining speed into the direction of being a seller's market. Again, they're heading in that direction. Everything with the red arrow means that it's headed further into a buyer's market. And so all of these cities have continued to deteriorate for sellers, if you will, over the last month. There are some signs that Paradise Valley is gaining ground towards a seller's market again in the last week. That's not really reflected on this chart, but as the Cromford report has been measuring that on a daily basis, they're noticing some gains for Paradise Valley. So we'll have to see if we can tell that next week when we look at this chart. And also we've seen a change decelerate when we take the average of all of these cities. This week, we've seen a change of 9.8% versus the 10.8%. And you know what? I think those numbers are incorrect. That is my fault. So we actually saw a change of 7.8% this week instead of the 9.8% that we had the week before. So, and then the previous week was this 10.8%. So I forgot to change that. My apologies, but that gives you an idea, right? So 2 weeks ago, we had a change of 10.8% going towards a buyer's market. Then last week it was 9.8% going towards a buyer's market. And this week we saw a change of 7.8% towards a buyer's market. So that change is lessening and means that we are decelerating, going slower towards this change to a buyer's market. So that's kind of the bottom line and the important thing to know there. So again, with supply dropping slower than demand, we're seeing a little bit of stabilization here, and obviously that's reflected in all of these cities. So let's talk about listings under contract. A couple weeks ago, we saw interest rates drop by like 0.5% in one day. And I said we might see that change in our market. And here we are looking at the listings under contract. You see a little spike up here. So that did spur some buyer activity. We definitely got a few more buyers out there ready to write a contract and get under contract, obviously, because they got a rate that was a little bit easier to swallow compared to over 7% that we've been seeing for the last few months. So a slight recovery in demand. We'll see if this continues. As I said, rates kind of remained stable last week, according to my partners in the mortgage industry, and we did see an increase in purchase applications last week as we had the week prior. So that is some indication of recovery. But again, this is just a really slow time of year. So I don't expect a whole lot of things to change or to happen. And even though we have about 7,000, just under 7,000 listings under contract, the Cromford report says that kind of typically this time of year in this market, we should be seeing about 9,000 homes under contract. So our volume is still extremely low, much lower than we're used to in any market. And so there's that, but we are seeing some response to the mortgage rate change, which tells us that the demand is there. People just don't want to pay those rates, and they're kind of waiting until things give a little bit before they jump in. So let's talk about rentals. So I don't always have rental information, but I do have rental info for you guys today. And I don't have a chart or anything, so I'm just going to talk through and put some graphics up on the screen. But we have been seeing the number of active rentals continue to increase on the market. We're sitting at about 4,000 active rentals on the market, which is the highest that we've seen since January of 2015. So it's a pretty huge amount of rental listings. It's up 123% year over year. So what does this mean? If you are a landlord, you have a lot of competition out there, and you're likely feeling that in the rental price that you're able to charge. If you are a tenant, you have way more options than you ever had, and hopefully you're starting to see rents that are a bit more affordable for you. We've seen that the single family rental listings are up 128%. And this is over last year. Townhomes are up 122%. And apartment homes are up 99%. So depending on what type of property you hold as a landlord or you're looking for as a tenant, all of these are up significantly since last year. And so obviously with a lot of competition out there, the rental rate, as I mentioned, is softening. And so the single family home average rent is about $1.43 a square foot right now versus the $1.76 that it was a year ago. So it's a decrease of 19% in rental rates. So keep that in mind if you are an investor, if you currently have a rental listing out there and having trouble finding a tenant. This is why there's a huge number of rentals on the market, and you really have to get competitive with your rates in order to secure a tenant. And if you're out there trying to decide if you want to buy or rent, renting is more affordable than buying right now. So that might be the path for you if you're not interested in buying and you have a lot more choices. And the rental market is a lot nicer to tenants these days than it had been in the last couple of years. So all right, guys, that's all I have for you today. I hope this was helpful. Check the description below. I have a few links there to get an instant home valuation and to search my MLS for homes in particular areas. If you have any questions, you can also click the link there to reach out to me for questions. So appreciate you joining me every Monday. Hit the subscribe button, come follow me on Instagram, and I will see you guys later this week with another video. And of course, next Monday with a market update. So make sure you join me. Have a great